How's it going, everyone? Bryan Baylon here, and this is your May 2020 market update. Before we get into it, please go ahead and hit the subscribe button to support the channel. That way you can get updates on my latest videos and tips to help you succeed in your real estate goals. So I'm going to get right into it. The market summary for the beginning of May of 2020. So we're going to analyze April 2020 and the activity in real estate that's happened then. So here are the basics, and we compare May 1st, 2020 to May 1st, 2019, and then from, April 2020 to April 2019, and then the previous month in March compared to April. So active listings, this is excluding anything that's under contract at all, is 14,051 versus 17,513 last year. So we're down 19.8%. But we're up 6.4% from 13,211 last month. So over year over year, the reason why we do year over year is to see the trends, right? So there's seasonality, and usually in the first and second quarters when things start to pick up. Third quarter slows down. Fourth quarter is the slowest. But in this case, we're seeing, as we compare year over year, a 19.8% decrease in active listings. So this key to the story of the market, and it's been like this for several years, is a low inventory. So that because there's a low inventory, it drives the prices up because there's less homes for sale. And since demand hasn't or has actually been fairly strong as well, it's continued to reduce the supply, and therefore, if there's more buyers than there are active homes to purchase, then of course the prices go up until the demand adjusts for how high the prices are, which in this point, in the past several years, it just hasn't happened. But here we're seeing sort of a shift, but mostly due to COVID-19 and the political climate, and also the just circumstances, either investor or home buyer or home seller fear, perceptions of the market, things like that. So, or also even unemployment. So many different factors can affect why listings are going on, or why there's a reduce in the amount of new listings. Also, under contract listings. This is including all types. So all types of under contract. So there's the pending. There's one's contract contingent upon buyer sale, which is basically someone has to sell their house before they buy one, or under contract backups, which is a status where in the event someone backs out, they are still able to take offers in, and they can take an offer right away if somebody else backs out. So that's what that means. So all of those kinds of under contracts, we have 9,512 this year versus 12,463 last year, which were down 23.7%. And we're actually down 6.3% from last month. So seasonally, we tend to go up, but we're down month over month, and we're down a significant, almost a quarter, right? Almost 25% of the amount of under contracts. That under contract activity is the measure of demand. So right now we're seeing pretty much a pretty significant reduction in contract activity. And I'm going to go into the reasons why in a little bit here. So monthly sales, actually closed homes. Now keep in mind, under contracts, anything under contract will pretty much predict, or sort of is this sort of an indicator towards how much is going to sell in 4 to 6 weeks. And the reason why that is because you need under contracts to have closed. So the average monthly sales price here is monthly sales 7,127 versus 9,659 from last year. So we're down 26.2 year over year, and down 19.6 from last month. So we're just not selling as many homes as we were last year, and we're just not selling as many homes this year. Average sales price per square foot. This is actually pretty interesting. So $184.24 per price per square foot versus $172.24 last year. So we're up 7% and down only 1.3% from last month. So year over year, as we stand right now, even with all the activity, we're still up in price per square foot, which is actually it's pretty incredible. And that's how the market has been. It's just been accelerating and appreciating at a pretty pretty fast rate. You're looking at, I think last year we were in the double digits for appreciation. So in 1 year in your housing investment, if you bought in January, let's say January 1st, 2019, and January 1st, 2020, you're really looking at almost a 10, 11, 12%, depending on your type of property, location, all that kind of stuff. 9, 10, 11% appreciation in 1 year, which is incredible for real estate in one given year. So in a monthly median sales price, so 299,999 versus 270,000 last year. So we're up 11% on the median sales price, but we're down 0.3% from 301,000 last month. And the reason why that is, so median, basically you calculate median. Let's say you take all of those sold homes last month, and you just put their prices, you spread them out on a spreadsheet, and you take all of their prices, you find the one and you put them in numerical order from lowest to greatest. You find the one in the very middle, and that one is your median price. And that price came out to $299,999. So it went down from last month, but here's the reason why. The reason why that is because the homes that are selling that are priced above $350,000, they have had a significant cooling in sales, right, and also in demand. Under contract activity has significantly reduced there. So more of the homes that are selling right now are actually being found in the 350 and under, and that's going to affect your median sales price. So that's the story behind that. So what's the story here? What are some takeaways for this market? So we still have low inventory, and that's really, again, the story of what was going on in the greater Phoenix market. A balanced market has about 50,000 active listings. Right now, around 14,000 active listings without a contract. So until that number changes, we're really looking at, what we're looking at. 50,000 active listings. We're at 14. We are quite a ways away from getting to that balanced market. Balanced market basically means there's no advantage between buyer and seller. So it's about equal in terms of the advantage to both. Also, contract activity. So we're down 23.7% from last year in April and down 6.3% from last month. So keep in mind, so we're entering seasonally, we're entering the selling season when sold homes typically pick up and also under contracts typically pick up. But this year we're turning downward. So even though inventory is low, under contract activity has also decreased as well, which would probably mean that if the inventory does increase, it's going to increase at a very slow rate. If there was no change in demand, and we still had, if we still had the amount of homes that were coming on a sale onto the market normally, we would probably continue to see this year, especially this year was projected for the prices to go even, much higher and the inventory to be record low. So COVID-19 sort of reversed things, and that's kind of how where things are kind of laying out right now. So sudden rise in active listings without a contract ran out of steam in April. In March, there was a significant increase in new listings that weren't getting under contract, which is actually sort of good for the market in the sense of going back for buyers, really. Sellers it wasn't, but for buyers, it was sort of helping them. So right now it's ran out of steam during April. It's kind of flat now. It'll probably be sort of stabilizing for May, and that's what the market's projecting. The sharp fall in contract activity also has stabilized at a level. So right now, like I think last month it was something like 26% reduction in contract activity over year. And now we're looking at single digits. So things are actually improving in that area. So we're finding the floor. It's not a free fall because, who knows, it could have free falled for quite some time, but it's actually stabilizing now. Sales are declining, but are not far away from leveling out. So we're finding some kind of stability here. May should see just much less volatility than April. Supply and demand both start to stabilize. But here's the thing: we're not going to anticipate, and I personally don't anticipate any fast return to normality, which would need sales to increase by 35% from where we are now. So that's basically the difference of in that normal market, probably February 2020 to where we are now. We've had about 35% reduction in sales. So we're a long way away from possibly going back to normal. And there's really two factors, right? Two factors that you want to look at, that I'm looking at in regards to just what to look for in terms of when to predict we're going to get out of this stuff. And one is it's herd immunity, and two is a vaccine or some kind of treatment that can be supplied in large enough quantities. That is important. So right now there are some, especially there's a lot of buzz with some experimental sort of pharmaceuticals, or even some that are, like in trials. Nothing really is, of course, right now we don't have a cure or a solution to COVID-19. But Gilead Sciences, one big one is Gilead Sciences came out with has a experimental drug called remdesivir. It was designed to treat SARS and MERS, which is also a coronavirus, but it showed evidence in faster recovery times for those with COVID-19. And so they actually fast-tracked right now. The last I heard that they fast-tracked them. They have emergency FDA approval. Gilead Sciences had, I think, 1.5 million treatments, depending on how many treatments they need, about 1.5 million people. And I think they donated that to the government to use and disperse for the places that need it. But that's the key, though, is the issue is production. So one, it needs to be, right now it's still experimental. They've emergency FDA approval, but they're also still testing it and wanting to make sure that it's going to be safe, right? So there is evidence, but again, it's experimental and people are electing to use this drug. Now, the thing is that that's the stage we're in. Still a lot that needs to happen before we can find any resolution in that piece of COVID-19 and getting to a place where now this is behind us. Until this is where we're at. So the market has to adapt to a new normal. And this will be very different from the old normal, right? So, and this will probably last for several quarters. So we're in it for the long haul, and we're going to be here to stay. So home prices, and this is sort of a nagging question in everyone's mind, it seems like, is are home prices going to fall? And is this the right time to buy? If home prices is a big deal to you, this is sort of the story behind that. Unless there's a large surge of homes that come onto the market, prices will pretty much stay the same. The good news is that if you are looking to buy a house and you've been looking for 6 months or even a year, or even just watching for the past several years, you're probably, you may have heard or you may have experienced, if you've tried to put an offer on a home, multiple offers, especially if you're 350,000 and under, multiple offers on homes, full price, waiving contingencies and all kinds of stuff, waiving inspections, and it just gets crazy. Now, instead of experiencing perhaps 8 full price offers that are waiving things or $10,000 over asking, now you're probably looking at like 2 or 3, depending on what kind of property it is and the condition, and if it's remodeled, all that kind of stuff. So if it's definitely relief. If you've been in the market and you've been frustrated, this is probably a good time for you to get in if you're a buyer, and just try again and to see if you can get an offer accepted and get a home and get something for you and your family. Or to invest. I mean, it's also a good time, especially a good time to invest. The deals are out there. It just depends, whatever market people are needing to sell. So you can definitely find something there if you're an investor looking to buy and do something, rental, fix and flip, that kind of stuff. Of course, have the numbers work out for you. But if you are a seller, if you have a home under 350,000, now's a good time to sell your home still, because under contract activity, under 350,000, from 2019 to now 2020 April, it's been up. Contract activity has been up 8%, but only down, up 8% in 2019, down only 1% in 2020, and that's pretty significant because basically says not much change, right? So instead of the growth that's been happening, it's pretty much stayed the same from compared to last year, and last year was pretty hot. So your house will most likely sell still because people have been looking. And, if you can imagine the amount of demand there was before COVID happened, and now that, there's, homes that are still for sale, a reduction in demand, and a reduction in demand because of people losing their jobs and that kind of stuff, the ones that are left are going to be serious. So if you're going to go out and look at homes, some people don't want to go out and about and meet with people and go into different people's homes and that kind of stuff. And if that's the case, if that's the case for some, that's going to reduce the demand, of course, the amount of people looking at homes. But if someone's going to go out to look at homes, right, go through the process of getting pre-qualified in a tighter market, right? It's actually harder to get a pre-qualification now than it was 2-3 months ago. Then they're pretty serious. So you're looking at a more serious group of buyers, and yeah, so that could work to your favor. But be patient. If you're above 350, it may take longer than you'd like. Watch the number of showings that you get, and also get the feedback from the buyers or the agents that show the homes, because you're going to want to know what people are thinking about your home so you can make the proper adjustments if your house is selling. But it won't be unusual for it to sit for a while, right? 60 days, 90 days. Right? Instead of selling in 1 day or 2 days, even if you're above 350, you might have to wait now. You might have to do some marketing and that kind of stuff. As a buyer, advantages for you: interest rates remain at historical lows, which has been fantastic. Had a client get pre-qualified for 2.75, which is amazing. It's pretty low. And yeah, you can take advantage of some of those opportunities and get in at a low interest rate, get some good terms, right, for yourself before getting into the loan, get some closing costs. Or you can work out buying down your interest rate, or paying up front the PMI, stuff like that. Definitely a lot of creative ways to get a good product for yourself, a good mortgage. Demand has cooled to reduce competition, so that's going to be in your favor if you're a buyer for sure. I mentioned that earlier. And lending restrictions have tightened, but buyers are still qualifying. So if you were on the fence, like when I mean fence, it's like you have a 580, 620 credit score, which is like the minimums. FHA is 580, conventional is 620. If you were at that line, then right now you're most likely not going to be able to qualify. And the plan is to continue working your credit, your debt to income ratio, that kind of stuff. Save up the money, get more prepared. But if you're above a 660, it should be okay, right? 660, debt to income ratio just slightly lower. Make sure no delinquents, right? For the past 12 months, late payments or delinquents, meaning delinquents collections, stuff like that. And just keep a record as clean as possible. Try not to originate new loans, buying new cars and stuff. I know there's a lot of incentives in cars. Try to keep your financial situation as clean as possible so that you can qualify for the home. Then afterwards, go ahead and get your car or do what you need to do. So that is a market update. I think that right now this is definitely not a 2008, right? 2008, the reason why the stock market crashed, the economy collapsed in a sense, is because of real estate. It was from fraudulent loans. This time around, it was due to something pretty unforeseen. There's been lots of talks about it. Big public figures have talked about the possibility of this happening, and there's been a lot of talk about this being a potential scenario, but nobody could ever saw it come this way. And then how we've responded to it has caused quite the constriction in the economy. So that we're definitely experiencing something fairly new, and we're, as a country, if you will, as a world, the world's handling it in different ways. But as a country, definitely have a lot of new challenges. But right now, in terms of real estate, there's good news for you if a buyer. There's good news for you as a seller. It's just about playing to your strategy and what your interests are, and we'll see if we can line them up. So if you need help at all and anything, if you have any questions, if you're looking to buy or sell a home, if you have any referrals in the Phoenix area, would appreciate you sending them to me. I would be love to be able to take care of them, guide them, and navigate through to help them reach their real estate goals. Hope you guys are having a great night, and I will catch you all next video. Thank you for watching.